Saurabh, thank you very much for joining us. It's a pleasure to have you on board of this project that is sharing information and sharing value, sharing your vision to the real estate industry for all around the world. So thank you very much for being here.
Thank you. Thanks for having me.
Excellent. So Saurabh, we're starting. I'd like to know about you, your background, your experience. Tell us about you, please.
Yeah, so my background is actually I used to work in the I'm not from real estate. I'm from outside real estate. Um, I've worked in maybe 20 plus industries over four continents. So Asia, a bit of Africa, and Europe a lot, and US. Um, and I've worked in industries varied as airlines to financial services to investment banks to aerospace, defense, to consumer retail, luxury, a bit of healthcare. Just been all over the place, and I've had two parts to my career. The 2010 onwards when I'm an engineer by education, so I started my career with IBM after I graduated. So I'm electronics and computers. I did, and then I joined IBM and I did a bit of engineering work, but mostly then I went into consulting, and then I started doing using statistics to improve operations for Fortune 100 companies across multiple continents. And started with India and US, and then gradually moved down towards Europe quite a bit. So that's lasted for. So I've also worked with Maersk, for example, the shipping company. So I've also done a lot of work in supply chain, which is quite topical right now in terms of the global supply chains for across which serve every industry that we know of. And so I did about 6 years of just working in operations, helping, people improve their or businesses, Fortune 100 companies improve their cost structure, optimize their costs, and improve revenue lines using statistics, using stats, which is today got a fancy brand called, the fancy marketing branding is called machine learning or AI, but it's basically advanced statistics. It's nothing more than that. And then 2009 to 10, I came to UK to do my MBA, to study, business and finance. And so I went to Oxford. And then after that, I joined Accenture for a couple of years. And the first year I was doing investment banking clients, UBS, Lloyds, Deutsche Bank, you name it. And then the second year was spent with Airbus in France. So I was in France doing the 2020 strategy for Airbus, M&A, divestitures, and just a whole bunch of topics for them. And then fast tracking a bit, I loved M&A, and I just ended up doing a lot of M&A. Firstly, sell side under $100 million type deals, selling to larger companies like Accenture. So we would take smaller, mid-size consulting or business services companies, and we would sell it to the likes of EY, Deloitte, Accenture, McKinsey, A.T. Kearney, and all these guys, or sometimes private equity. And then from there, I went. I also helped a restaurant SaaS business scale up and exit. So I joined them when it was a company called Quandu, and when I joined them, it was about 110, 120 million worth. And 8 months after, we sold for 220 million. So it was a pretty big growth strategy, and I helped them grow across Western Europe and internationally expand. And then I went back into consulting, and I was a senior partner. I was leading deals. Clients were the likes of Cerberus, KKR, Blackstone, Warburg Pincus, so all the bigger big buyout funds, mid-market funds, and I was heading UK and Ireland for them. And I also looked at a lot of deals in Africa, sitting in London, and we did London was the office to manage UK and I, but we were also doing deals in New York, in Paris, in Africa, And I was a deal lead, of course. Yeah, I mean, so that's been my background before setting up Houzen. And actually, the idea of Houzen came about from one of the deals I was working on. It was a large buyout fund which was looking to buy one of the big agencies. So the competitors of, let's say, Savills, Knight Frank, and all these guys in Western Europe. So they were one of the top 3 players in Western Europe. And a large private equity fund wanted to buy them out. So it was a co-investment opportunity. They wanted to put €1 billion plus into the deal, and then it was part of a larger deal. And we went back and we said, you should just stay away from the sector. You should stay away from the target, and this was in 2016. And we said that it's a sector that's about to change drastically, so you should stay away from it. And they didn't do the deal. And which was great because our predictions worked. About a year and a half later, the countrywide CEO or the C-suite, let's just call it that, left or were made to leave, or there was a lot of chaos. And countrywide, when we did this project in 2016, had a market cap of over £1 billion pound sterling. Today, it's lost about 90% of its share value, the shareholder value. So they're trading at something like 100 million. Sometimes, I mean, I think during COVID or just before, they even went down to 70, 80 million in terms of share value, which is peanuts for a company that size. Then Foxtons, LSL, all of them have had a battering of share prices. But that's just public markets. But the reason is that these old school business models are just going to die, or not die, but they will evolve. Or some people who will help in the evolution will take the talent and turn them into something new. And that's what we were trying to do at Houzen.
That's really nice. So, and well, so trying to understand this, so you kind of already explained, but going deeper on what exactly was the problem you were trying to solve when you come with Houzen?
Yeah, I mean, the main problem that came up, and it was a shocking problem to discover coming from an outside industry, not when you're not from real estate and you've worked in pretty fast-moving industries, whether it's restaurants or transport or financial services. Things move quickly, or payments or whatever. What you see is that it takes weeks or months to close a deal in real estate. So from the point of a customer thinking that I want to buy a house or rent a house to actually closing the deal, it takes weeks or months. In every market that we know of, there are some markets which are slightly faster moving, like Paris is faster moving. Frankfurt has become faster moving because of partly because of Brexit. London's become slower in terms of speed. The speed is always a problem. It's not like I am a customer and I say, okay, I need to buy a house, I need to rent a house, and within 24 hours I can do it. So understood that the deal is, it's a high, it's an expensive commitment, but the customers, there's a lot of customers who are ready to move pretty quickly. The problem is that the B2B, the industry, the B2B space is slow. So the consumers are, booking a taxi in 2 minutes, or they're getting a meal delivered to their doorstep in 20 minutes. So they're used to speed. Whereas the B2B operators, the real estate companies, basically, whether you're an investor or a operator or a property manager, whatever you are, in whatever capacity, because the industry is quite, they call it, it's a people business. Well, the customer doesn't want it to be a people business. The customer wants speed. Because there's so many people, and to no disrespect for people, the process becomes inefficient or becomes too manual. There's too many emails, too many phone calls, too many meetings that are made to achieve the same kind of decisions in the back end, and which is why leasing slows down, or on the sales side, the broker discussions slow down, or the lawyer or accounting, whatever decisions get slowed down. So what we're solving is the point from when a property comes to the market to the close, or from the point when a customer says, I want to buy a property or rent a property, how quickly can they actually do it? So we're solving speed. So speed of transactions. So is our kind of internal metric that how do you close deals faster. And even if you go on our website, so for example, when we started out in 2017, we couldn't actually commit to the market how quickly we will make deals happen. In London, it would take at least 3 to 6 weeks, depending on which borough you were talking about, to actually get an offer. We were doing it in our second year in 5 days. Today, our metric has reduced to 3 days. And gradually, we want to turn it into 24 hours. And at some point, we want to do what airlines did, or do, which is, you can book a flight anytime you want. So we're trying to turn it into that by digitalizing the entire process, or as much of the process as you can.
Excellent. And so if to going deeper, if people want to buy something from Houzen, what exactly is the product or service you are selling?
So we work on the B2B side, actually, because like I mentioned, the main problem is actually not on the B2C side, because the customer is ready to buy, or the customer is ready to rent. The real problem or the inefficiencies are actually on the B2B side. So we're trying to fix that. So we currently, what we do is we work with about 3,000. So as a use case or as a case study, what we do is we go to large developers. So some of our clients include Invesco, Greystar, Granger, Get Living, A2 Dominion, which is a large housing association, and one of the largest, some of the largest property managers like Touchstone in UK. So we work with all these guys, and we take a lot of their stock, and then like an exchange, we take that stock and we, the system figures out who's the right agent to give that stock to, and then it moves. So if, for example, if it goes to John, and we work with 3,500 agents, so that means that it's kind of like Uber in a way. So you take that, you book a cab, and then Uber figures out which driver it should go to. And if the driver says, no, I don't want it, or I can't perform, it takes it back from it and gives it to another driver. It's kind of like that. So our machine learning engine basically constantly keeps track on performance on all agencies, and for us, agents are not just agents. We also use gig economy. So we're turning regular people into agents. We will turn sometimes housewives into agents. We will turn relocation agents, HR companies into agents, like HR departments of companies. Or sometimes we work with buying agents or even wealth managers. So wealth managers who are working with family offices, etc. So all of them for us are what we call as channels or distributors. So we take the properties and we distribute them, or the system distributes them according to the performance that it had till that point figured out on the market. And we also collect a lot of big data, i.e., performance data on agencies, performance data on the market, and using a bunch of algorithms, we figure out, okay, this guy will be able to move it really, really quickly because I know that he's got tenants or buyers for this property. So that's how it started. Now what it also does is agents are proactively putting their own tenants and buyers onto the system. Now the matching is improving now, because now we can match supply and demand in real time. So the matching becomes way, way, way faster. And hence why we were able to achieve the 5-day and then now 3 days. And then also on sales, we want to do the same. So yeah, typically we work with either brokers or large developers or investors, and we help them clear stock quicker, like way quicker than Savills, Knight Frank, and all these guys put together. So we always beat them by a factor of 3 or 4 times, the big corporate agencies. We also, by the way, collect data. So a lot of, for obvious reasons, we're designed like that every transaction we have, we collect data. And that data is now, we launched a new product called Houzen Data Labs, which is now being trialed by some of the leading developers and investors in UK. And what it does is, for investors or asset managers, it starts predicting how long it will take to, based on market information or market performance information, it'll tell, and this is real data because it's real willingness to pay from the customer. And it also aggregates transaction, executed rent, executed sales data to predict how long it'll take to lease up or to sell, and how do you improve your asset management based on the local market benchmarks or best practices from the industry. So we're digitalizing investments and asset management basically to some extent.
That's nice. And how do you monetize or pay fees for the broker, or
Yeah.
or do you make money for yourself as well?
So it's a mix of a couple of things. One is a subscription-based model. So a lot of brokers are now actually paying a subscription because it's cheaper for them to just use a subscription model than pay per close. Otherwise, the standard is, when they close a deal with us, they we split the commission. So they get some part of the deal and we get some part of the deal. And on the data lab side, it's pure subscription for now, which is that because it's also quite new. So we're just doing a plain subscription to developers and landlords or investors that say, okay, every month or every year. Right now, we're doing a flat annual subscription. But over a period of time, there's going to be a lot more services there, which will basically help digitalize. You could be sitting in your home because COVID just hit. So how do you know what's happening on your asset? Or how do you make investment decisions? How do you do due diligence? All that will come there because we're doing that anyways through manually, where we're doing that through Excel sheets or manually. And we're just going to load all of that up there. So then it'll become a subscription plus deal by deal basis pricing.
Excellent. 1 second, there is a noise here. 1 second.
Sorry?
There is a huge noise here. 1 second. I will stop the noise.
Sure.
Sorry, I'm back. Sorry for that. And I'll cut it later, no problem. No worries, I'll cut this part of the video, okay? And so going deeper on I'd like to know the key points of differentiation of your company. What makes Houzen different, in your opinion?
Sorry, say again, please.
What are the points that makes Houzen different? So what the key points of differentiation of Houzen?
Key points of differentiation. Okay, so well, two things are exactly what our services promise. So one is the fastest leasing, or we call it fastest clearance, exactly like a stock exchange, right? So we're basically a property exchange where we say, you give us properties, we'll clear it the fastest in the market. At least in London and Manchester, we've established that track record now. And it's not one or two properties, it's hundreds of properties. That's speed. So that's one point of differentiation which no one else can promise, and no one else can actually put their name on it. We actually have started predicting it, and we've started saying we're going to clear 40% of your stock in X number of months, and then another 20% in X plus Y number of months, and we work like that, and we're able to deliver them. That's one. Second is data, which no one else has, interestingly, at least not in UK. In UK, either agencies have the data that we are collecting, or referencing companies have that data. But agents are not tech people, so they don't know how to build tech products the same way as we would probably be bad agents or developers. It's like they would probably be not great tech people. We have data scientists. We have people who are deep into NLP and deep tech, and they're reading text. They're reading machines are reading texts and blah blah and all of that. So that's data. So the data that we have, or the way we collect data and the way we present data, is unmatched. And the reason, and the best testimonial is that we are already being used by the largest players like Greystar and Invesco, and all we work with some of the biggest names. And when we ask them, hey, what do you think is our best differentiation point? They always say it's performance, which is what I said, speed. Second is data. And third is probably we're just quite professional. And we come with a very banking consulting type ethos or way of working, which interestingly, I wouldn't say all, but real estate, you don't see a very high level of professionalism in some pockets of the industry. So whether it's the agency side or some parts of, let's say, I think, operations are not as tight. So we have a very strong operational ethic. And we just, work like we would work with like with Goldman Sachs or with a large private equity fund. So I think that level of professionalism and commitment to doing stuff is sometimes not there, or at least that's what our clients tell us. And then I guess finally, we worked in many industries. We don't have a single person from real estate actually. So we're solving the problems through through a math problem type logic, right? So it's a math problem to match supply and demand in real time, and we're solving it like that rather than doing it through but we are now thinking of hiring some, because we've grown quite a bit, and we will now start bringing in people from real estate. But so far we've not had any people from real estate, but so far it's also worked in our favor because we always apply examples from the airline industry or the or stock exchanges or fintech or restaurants or hospitality a lot, those kind of things, or insurance, or yeah.
Sure. And in terms of technology, what's behind the scenes? You mentioned that you are using advanced statistics, but and how exactly do you? So it's a mix of AI. It's a mix of the cloud computing. So what's the technology behind?
So AI, like I said, is a fancy word for advanced statistics. So statistics is you can have it in different ways, but really what you have is the straight line equation, y is equal to mx plus c. So, and that is what the mathematical problem is, which basically means that, for example, if you're trying to solve, what is the valuation of a particular asset, you will of course look at DCF and all that is fine, that's great, but you basically are looking at, when you're looking at a component basis, what actually makes up the apartment or the home, or arguably the retail space and the in other sub asset categories is the same logic. Then you basically start identifying all the factors that lead into the price, and then you start figuring out the coefficient. Now, how as this because traditionally, about like 10-20 years ago, when there was no data, you used to have a lot of statistics, and statistics is based on samples. So you take a sample data set, and then you you use a certain amount of tests and certain amount of tests and tools to figure out how will this data behave when it moves towards population. Because you can't survey 7 billion people on this earth, but what you can do is use a sample which is representative and diverse enough of which and representative, like I said, of the population. And then statistics helps you figure out if that sample was accurate and representative of the population. What machine learning or AI does is it helps you increase the sample. The logic is the same, the exact same logic, the same laws of statistics are governed here, but it just helps you expand the data set. That's one, which is, how do you price your asset? Because that reduces friction. And you give it to the buy side and say, hey, okay, buy side doesn't have to sit with 20,000 Excel sheets and starts doing a finger in the air and what are the cap rates and what is this, that. No. You have everything. You have all the factors at the tip of your finger, and you just start modeling what should be on your football field. What is one comp, which is, let's call it, based on your component based, and one component is also the neighborhood, or what is the strength of the neighborhood, and what do people value? What is your customer value? So from the eyes of the customer, what is the willingness to pay? That can be broken down into, I don't know, 20, 30, 50 components. One big component would also be the macro situation, like COVID or something else happens. So you keep adding more and more components, or what we call as X's or factors, which lead to the Y, which is pricing. That's one application. The second one would be, how do you match supply and demand? Supply and demand is simple. So you have 100 units. How many demand points are there in the market, and how quickly do you match supply and demand? Because typically in every market we see, demand comes, i.e. renters or buyers looking for flats or homes, or, I mean, let me just stick to residential because this also applies in other asset classes, but let's just stick to residential. And then they get lost with different channels. So they go to some agents, they go to some landlords, they go to some developers, blah, blah, blah. But if you had access to all the demand data, and if you had access to all the supply data, it would be easy to do matching. And that's what we do. So we do the matching between supply and demand, and then we break down the supply into what does the supply mean. So we call it supply attributes, i.e., is it a 2-bed? Does it have 2 bathrooms? Does it have a garden? How big is the garden? How big is the gym? How big is this? How big is that? And then on the other side, demand side, you break down the demand criteria into several, let's call it X's, which are my affordability is £2,000, but my budget is only, I don't know, my budget is lower because for whatever reason I want to save some money, or my affordability is 2,000, but I'm actually going to increase my budget because of COVID, so I'm just going to increase my budget because I want a garden or a co-working desk or something. Then I want to be in 5 miles from my office, or so you can start optimizing on the demand side as well. This is kind of what a Netflix does on in when you watch it, and you keep you keep pressing. Let's say you keep watching movies. You watch the first, like, let's say 2-3 Tom Cruise Mission Impossible movies, and then you watch, I don't know, Vin Diesel movies. The third one might be a Bruce Willis Die Hard, because they start recommending you based on your choices. And that's what we call as, in this case, this would be supply side optimization, because you've got tagging in the background and it recommends. So we do a similar bunch of algorithms. And then finally, what we're embarking on new is using computer vision to start reading pictures and videos and start, again, attacking the question of pricing or valuations with a bit more intelligent and automated and quick, because the machine can do in 10 minutes what humans will take months to value all of UK's real estate, for example. So that's what we're going into next. That's our next project.
That's really nice, really nice. Which countries do you work currently in?
So our supply is mostly in UK, but we have presence in China, Singapore, India now, and we're trying to push Seoul, i.e. Korea, and we're quite bullish on Asia. I mean, Western Europe is again, one of the things we continue to look at. Germany, France. We got offered something in Portugal recently, and we are looking at Spain. So for us in Western Europe, the hot markets for us are UK, Ireland, Germany, France, Spain, and a bit of Portugal. And Asia, it's Korea, China, Singapore, Hong Kong, India. We're not really going after North America so much, but we are talking to people in Canada.
And how many people work on housing today?
Yeah, so we're just under 25 people. So yeah, we also had to let a couple of people go, so we're between 20 and 25.
Nice. Yes, they're very difficult. I was talking to a guy yesterday, a startup as well, and we were talking about the challenge of growing without putting too many people on the operation, so you can
Yeah.
put the right balance between your dedication to leadership, your dedication to the deliveries to make your business grow. So, and how do you see this balance between the strategy of growth of your business and the strategy of consolidation of your business? Are you ponderating this?
Yeah, so we're taking an aggressive view. So we're taking the opposite view. So we're consolidate. I mean, last 2 months we actually took. I mean, some of the projects that I just described actually came about from the last 2 months, where we actually, for the first time, got time to sit down, not listen to the world, because the world didn't have much to say. Everyone was at home, and we obviously read a lot of books. We all read a lot of books here, and we also just got time to figure out what's happening in the world, what kind of tech is available, what kind of like how far has technology evolved in other markets and in other industries, and what part of that can we bring in where we feel that the market is ready now. So for example, there's a lot of talk about blockchain and this and that. Like, it doesn't really apply in real estate because you need a regulator to regulate as much as it said, because we did a deep tech paper back in 2017 for our own benefit. And what we realized was that, and we spoke to some of the, I can share the link with you with RICS. We did one with RICS, and they helped us present to like 100 investors, operators, et cetera, at RICS here in London. And our assessment was that real estate is not ready for the tech that is out there back then. Now, because of COVID, it might be forced to, or if it doesn't, then some pioneers who will adopt it quicker, they will eat up a lot of the market share, or at least people are listening, and people who will listen and execute quicker will actually, we could actually grab market share. So what we are trying to do is basically build tools or build these, whether it's the computer vision algorithms or all those kind of buy-side helping services. Yeah, I mean, so we've consolidated all we could have in the last 2 months, and now we're just going back and we're really trying to aggressively push our services because we feel that the market is ready. I mean, we were always ready, but I think there's always a thing about innovation that, innovation is, what do you say? Innovation is when timing meets idea or something like that. So when you don't have timing, it could be the best idea in the world, doesn't matter. What you also need is the customer. For us, the industry is the customer. The customer should be buying the idea. So we feel that there will be quite a few takers now.
Excellent. And so, of course, you are delivering a product and a solution for the real estate market that it's a very conservative market. So
yeah.
You're probably facing some, of course, you might be facing some resistance, but by the other side, you are actually simplifying the process. But in terms of the biggest guys in the industry, that they are more resistant to this, to any type of technology. So how do you overcome these difficulties?
Yeah, I mean, 3 years ago it was a big problem, of course, but we had the benefit. Our first client was Greystar in UK, and it helped build credibility. Today we're the only company that works, at least on the leasing side, we're the only company that works across all of Greystar's assets in UK, multifamily side. And we do work on student. We are also now doing, buying and selling. We're also doing shortlets. We're doing everything now because our transaction is a transaction for us. We're also starting to do big block deals. But I think it's just based on consistency of performance. We have taken a performance first route. We don't actually go to a lot of PR events or industry events and all of that, because what we wanted to do was, very early we figured out that the industry will take time to wake up to what we're doing and then kind of recognize and acknowledge that what we do is actually good. So we literally just focused on that. So for the first 2 years almost, we literally put our head down and just worked with our clients. So one other large client was Kennedy Wilson. which is an American big fund. So we helped them, and we, you know, wherever we worked. So Greystar, when we started working with them, they were using all the big six agencies: Savills, JLL, Foxtons, Knight Frank. We have another one here, Chesterton's, everyone, JLL, CBRE. And then, you know, 2 years later, we only saw two more agents at max, and normally one more agent on the asset, because we were cheaper and we were, you know, much faster, which is the case with them. But with other a lot of other asset managers, we've actually started partnering with them. We've also started talking about more strategic kind of partnerships where, you know, they say, hey, you know, we're mostly investors, we're not so much operators. And we say, well, neither are we. We're never going to operate. But what we can do is create a structure, and we can create the infrastructure of digital and, you know, tech and data on which you can just hire someone, or we can help hire you, help you hire the property managers, and then the asset, and, you know, maybe one or two senior asset managers and one or two acquisitions, of course, investment team members. But then you don't need a massive team to grow. Because then you just need the software, you just need the data, which helps you make asset management, leasing, and investment decisions, which we can supply. So we're getting into that whole, how do you support your operating model overall, and change the industry a little bit. And to our surprise, actually now, especially in 2020, a lot of people want to do that because it's also very competitive. We see that a lot of operators don't actually have any differentiation. So when we ask the operators, what is your differentiation? I think they struggle to come up with something. So a lot of times they ask themselves, hey, what is our differentiation anyway? And then running that business for 5 years, 10 years, and they joke about it. But, you know, the reality is there isn't that much differentiation. And especially from the eyes of the customer. From the eyes of the customer, I'm just a guy who has 2,000 pounds in my pocket, and I just want a house. So am I going to live in an apartment block or a townhouse or somebody's apartment block? Which apartment block? Is it going to be a built-to-rent multifamily, or is it going to be a non-professional managed, you know, buy-to-let landlord? I care less, especially in UK, because the market size of built-to-rent is very small. It's less than 1%. US is different because people also understand that, you know, Starwood, Greystar, all these are brands. UK, you know, the entire industry is less than 1%. So I think, yeah, people want to do things differently. People want to innovate a bit more, I think, in UK now.
Excellent. I have one last question for you,
Please.
Saurabh. Yeah, and this question is, well, if you could give one piece of advice to big companies in order to help them to better partnership with small and mid-sized companies, with high-tech companies. And this would be one piece of advice, but another piece of advice as well for small companies that are at the beginning of this innovation journey, which would be?
Yeah, so for the big companies, I mean, corporations, I've worked with, you know, corporations, all, you know, some of the largest corporations, and I've advised them all the time, whether it's the C-suite at L'Oreal or, you know, at Maersk Logistics or, you know, Airbus, or, you know, some of the largest companies with multi-billion-dollar budgets to move things around globally. I think the way, let's say Unilever or L'Oreal or any of these big companies, or banks like Barclays or Lloyd's or Goldman or whatever, the way these guys partner with smaller or nimble companies is that they recognize and they tell themselves that we'll be good at some things. And so, you know, just to kind of maybe because it's the last point, maybe I'll just give you a phrase from Steve Ballmer, who's the ex-CEO of Microsoft. And he used to say, there are some things that corporations do really well, but then there are some things, there are other things that startups do incredibly well, because there's just more nimble and they work on a niche, versus corporation has to move the entire ship forward, versus the startup is just a little, you know, speedboat. And if you want access to the market at all times, you have to have a lot of speedboats working alongside you. Otherwise, you will never know what's going on in the market. So just recognize that you have to partner with them. So recognition is the first bit. And yeah, I mean, work with quite a few of them just to test which one works, which one doesn't. The industry is quite new, and and to answer your second question, I personally actually I'm not that young. I worked quite a bit in my life, so I'm in a position to actually mentor startups. So I mentor startups in the biotech space and retail, fashion, and also, or am an investor in quite a few of these businesses, or once or twice in the senior living, or just the startup kind of property management or whatever tech space, which are typically run by early stage people, just out of uni, or a few years into their career. And the only advice to them is just focus on the value, focus on the numbers, only focus on the numbers. And if the solution doesn't follow the numbers, it will die out at some point. So you might get initial bump you might be able to raise a bit of money, but then if there's not sustained value, because building a startup is easy, but building a company is very difficult, because the world keeps changing at the speed of COVID. In 15 days, the entire world crashed. So how you're gonna? So it's never about one idea. And if you're gonna be a one-trick pony, you're gonna die anyway. You're building a big corporation, but you're starting out as a startup. So I think that's the mentality one needs. So if, of course, in your early years of career, in your early 20s or mid 20s, you don't actually have that experience or skill or experience level or that maturity, but you should just be, again, conscious and recognize that you don't have that, and you should work towards building that really, really quickly. Because in the end, you're going to be managing a lot of stakeholders internally and externally, and it'll come down to that, basically.
Amazing. Excellent, Saurabh. It was a huge pleasure to have you here. Thank you very
so
much for your points of views and for sharing all your knowledge and experience. Thank you very much.
Thank you so much.
Let's keep in touch.